All right, guys, rock and roll. Good morning. It is Tuesday, July 19th, 2022, 9:03 Eastern Standard Time. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Thanks for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time. Let's get to work. Dow Futures are up 222 points, NASDAQ up 0.95%, S&P Futures up 0.93% at 3869. Russell 2000 index up 1%, 1.03 this morning. 1756 crude oil. Let me delete this. There you go. Crude oil right now is down 2% this morning, 97.38 a barrel. Gasoline futures down 1.25, $3.22 a gallon. 10-year Treasury yields above 3% this morning. Dollar index, which is the number where the actual chart we're going to look at today, 106.69 down 0.63%. The VIX down 2.5% below 25 at 24.65. Gold futures are down 0.15%. Again, this is with a weaker dollar. Look how much commodities are rolling over. Crude oil, gasoline, and gold and silver all down, even though the dollar's red. Look at the euro dollar up 84 pips, 102.29. Remember we talked about parity? You buy that parity level, the panic parity, $1 or below $1 per euro. We're going to look at the dollar index now, and I'm going to show you that we may be a good possibility or a good level to start shorting the dollar. Oh my God, shorting the dollar? Yeah, king dollar, right? Well, what goes up must come down sometime. Again, unless we have just generational highs for the rest of our careers. But again, we'll look at that here in a second. Look at the dollar yen, 137.69. We know that the yen is a risk off currency, yet stocks are up and the yen is up. So again, it's all about this right here, the Dixie. That's what I'm looking at. Take a look at Bitcoin futures. Now we know that the dollar's down. So again, Bitcoin is priced in dollars, but against all other commodities this morning, look at that. All against all other commodities, gasoline, crude, gold, silver, all red except Bitcoin and Ethereum. Now, why is that? Because Bitcoin and Ethereum is more beta, let's just call it higher beta. But Bitcoin is, again, just a risk on proxy, just like the NASDAQ. It moves with the NASDAQ. So the NASDAQ's up, more than likely Bitcoin's going to be up. So 22,135, we talked about that chart on Bitcoin yesterday. If you didn't see the aftermarket recap, that was at 5 p.m. yesterday. I suggest everybody to take a look at that because we went over the Bitcoin charts on Bloomberg. Ethereum at 1555, $2,000 is my target. Not like I'm going to sell anyways, but again, Ethereum rocking and rolling. Copper futures down 2.47%, $3.26. Probably asking yourself, Carlos, who gives a shit about copper? Pardon my French. Again, copper is a good industrial barometer. So again, usually in recessions, slowdowns, industrial slowdowns, construction slowdowns, copper tends to get weaker. So again, if copper can at least hold on to some strength, then we would have that, at least that marker that at least a recession won't be in the cards. All right, let's go over some news this morning. Housing starts were a little less than expected, 1.559 million versus 1.58 million. Building permits, again, leading indicator, higher than expected, 1.685 million. 1.65 million was the estimate. So housing starts 2% month over month for June. That is equal to estimates. Building permits down 0.6% month over month versus the estimate of 2.7% to the downside. So a beat on housing starts, at least in regards to estimates. Looking at it here, we also have gas prices down for a 34th straight day. The national average is now $4.49 per gallon. Again, we talk about gasoline futures pretty much daily. 35 states have at least one station of $3.99 or less. 2 states, South Carolina and Texas, have averages under $4. We'll be joined by Georgia and maybe Mississippi today. So that's some other good news. Other good news, I'll just go ahead and move this here. Margin debt tumbles 9.2% month over month to June 683 billion. This is borrowed money for the stock market, down 252 billion from last October's record high, which has tight correlation with the S&P, which has peaked in January and dropped 24.5% through last month's lows. For perspective, both margin debt and S&P 3858 bottomed in March 2020 at 479 billion and 2192 respectively, 2192 being the S&P. Here is the chart. Again, we talked about the margin debt here. This is margin debt. Here's a good chart in terms of commodities. Expect a rollover. We talked about commodities on that video for our investment club. Again, in terms of commodities, really the only one I like is crude oil. Again, I still think it's cheap in terms of Chevron and ExxonMobil. ExxonMobil was price upgraded today. Looking over one more piece of news, we have here UK temperature reaches highest level on record. That's heat temperature. Taking a look at, let's see, I had one more here. Johnson and Johnson, big number. Big number meaning importance. Again, this is a Dow component. Quarter two 22 earnings, EPS $2.59. That's a beat of $2.55. Sales 24.02 billion, estimate of 23.96 billion. Again, that's a beat. 3.7 billion higher than expected. Research and development expenses. Fiscal year adjusted EPS $10 to $10.10. Saw $10.15 to $10.35. So again, a little less of a EPS adjustment. Strengthening US dollar impacting adjusted EPS outlook. And what is happening with the dollar? We talked about that. Why it is so important. I posted that on Instagram earlier. I believe that was yesterday. And I posted another one on the dollar. Here we go. So let's go ahead and max out this dollar chart. And again, we're just going to put some trend lines. I did this morning. Again, we had this kind of relative high peak in 2006 where we rolled over. So again, you could throw in another drawing if you want. Again, this is kind of the last little apex that we kind of went by. So again, you could see downward trend this way. Again, calling the double top, and then we kind of went down. 2014, we hit the lows of the dollar. But again, that point there being a good level to look at, and you can see connecting with that peak in around 2017, and then to the penny or to the nose, 109.09. If we break above that, then yes, 114.76 is going to happen. This would happen if, for example, any kind of border geopolitical issues happens with Russia and Ukraine and the EU. That's kind of the fundamental analysis with that regards to that in terms of the dollar. The dollar has just gone too high too quickly. You're talking about $90 to 106. The dollar index isn't supposed to move that much. The dollar index is just the dollar versus baskets of other currencies: yen, euro, pound, Swiss franc, Russian ruble, whatever. The main thing is that we are the best block in a best house in a bad block right now. Euro is weak. Japan is weak. I mean, England's weak. Great Britain is weak. Same thing. But again, that's what we're watching for. So again, let's take a look at some support. Let's go ahead and place this alert here at 106.41. If we can break that and sustain that downside, 105 is going to come calling. And this is why the markets are up. The dollar needs to continue to be weaker. Again, now we're starting to see EPS adjustments based on the dollar. We saw that with IBM yesterday. We saw that with Johnson & Johnson. Granted, Johnson & Johnson is it's a lot more stable. It's a lot richer company, better balance sheet than an IBM. That's not to knock IBM, but Johnson & Johnson is one of the premier companies in the United States. So again, this is why the dollar is so important. So keep in mind with this, guys. Here you go. See that point here, right around 2006? That was that apex in 2006 where we continued to go down. And again, we have one other apex where we broke above it. We had a slight double top, and then we broke above that. And you can see that 110, 109-ish level, 109.50, let's call it, seems to be that kind of resistance just based on this trend line. It could break, but again, you could see that we whipped off it pretty closely. So again, more things to be seen in terms of the market. In terms of S&P futures, I do have SPY calls with the team for today. They are in the money this morning. Let's take a look at it. We have the 385 calls for Wednesday. The reason that we got into that trade. Let's take a look at S&P futures on the daily. Actually, you know what? Let's go and take a look at SPY the daily. So let's take a look at SPY, and really the level we were looking at, and you could see pretty much lately, has been that 20-day moving average. 20-day moving average has kind of given us that roadmap. And we've been keeping bouncing off it, even though we have a gap to fill below. But that 20-day, and that was basically a trade based on the fact that we were going to bounce off that 20-day kind of upward momentum. But you could see here on SPY, again, kind of a pop, then a drop, but holding on to the right around that 373 support. So again, nothing has really changed. You're really just playing the ping pong here as a day trader. There is really no set standard or set conviction yet that the worst is over, or any kind of bottom is in. Maybe a bottom short term, but not the bottom, right? And what are the markers that we're looking for? Well, we're looking for EPS adjustments for the price to earnings ratio. We got Johnson Johnson kind of retreating back their forecast because of the dollar. IBM for the dollar. Microsoft had that warning. Target had that warning. This is months ago, and Walmart. So again, the dollar is key. We already looked at the dollar. So again, the dollar needs to reject for the S&P to continue higher. What's the level to reject, class? Right here. Let's call it 109.20. So again, 109.20 needs to be on your alerts. If that breaks out, we're going to get weakness in the S&P. We're going to start testing the lows. But if we look at the ES right now, what is this telling you? Again, the dollar and S&P futures or S&P 500 is inversely correlated. It's no secret that we're going higher because the dollar is higher. The dollar is lower. So we're looking at that. We're also looking at the Fed. Again, the Fed reports, or is going to do their raising next week. 75 basis points is pretty much a lock. In terms of news, we had home sales or home contracts, pending home, all that stuff. Which one was it exactly? Not pending home sales. It was what was that? Housing starts, excuse me, not pending home sales. But that's where we are. So I expect us to get to around 3,900 in the S&P. Again, 3,950 being the most recent high. If we start looking at the daily on S&P futures, what does 3,900 tell us? 3,922 is your 50-day. That could be a rejection as well. We talked about, again, that kind of downward channel that I put on Bloomberg. And again, 3,900 being that spot. If we break above 3,900, then we could start talking about that gap to fill on SPX, which is S&P spot, of around 4,000. Again, but 39.27. Again, this is the downtrend. This is S&P spot. You have the 50-day right around 39.31. So let's go ahead and place an alert at 39.31 on, or 39.33 on S&P futures. That gets us to the 50-day. That would get us confirmation that we need. We'll get to 4,000. Again, that would break out of this downward trend. We may get that ignition of at least some kind of bear market rally. The seasonality kind of lines up. The only kind of headwind or kind of thing to work out, a view here, is really earnings. Earnings revisions, we need to see if those PE multiples need to be fixed up. Let's go ahead and answer some questions. Good morning. Hey, Carlos, what is your price to add Google? I want to add more and hear your opinion. Well, we just got our split. So let's go ahead and bring up Google together. We'll go ahead and bring this up on a daily. Actually, we'll bring it up on a weekly. Gives us a little more context. We did fill a gap, obviously. We now filled that gap here. No more real gaps to fill to the downsides, or at least that. So in terms of Google, again, I don't want to buy any major positions yet because 3,500 hasn't tapped. We haven't broken out of, we haven't gotten any Fed pivots, and we haven't gotten all the earnings yet. So I would kind of hold tight on Google, but if you actually absolutely need a level to buy, I think $100 is fair. 105, 100 is fine. Google is a great company to own. I do own it as well. That's pretty much levels that I'm looking for. But again, I want to see those earnings as well. Let's see if we get any revisions. Thoughts on IBM earnings? Semiconductors bullish after the report. IBM's, yeah, they missed the free cash flow numbers. That's true. This is from Santiago. And IBM this morning is down about $8. Now, IBM is not really semiconductor related. It's more cloud-based enterprise computing. So a better peer review or peer comparison would probably be Microsoft CRM. Here, I'll just show you on the map, a lot easier. So we do have, again, you have semiconductors on one side. IBM is really in this area here. It's right here, information tech. IBM should be here. Is it here? IBM should be here. IBM is, okay, well, IBM is not showing on my heat map on the S&P, but it should because it's considered enterprise software. It's not considered, here we go, IBM down 5.6. So again, look at the names that are more in their peer group. Again, kind of near CRM, ServiceNow. You also have Accenture. You also have Fidelity. You also have, not Fidelity, National Information Services. Accenture. You also have, what's the other one here? The other one, I had the name here. CDW. So again, that's more of their sector. But again, they are lumped into technology, even though futures are higher. So again, let's take a look at IBM's PE ratio that is now updated. So now IBM's PE ratio is trading at a 13. That is one of the cheapest in their sector. Now, this may not be updated pre-market. Maybe we'll probably get to around 12 or 11 based on the current stock price and their earnings. But again, IBM is cheaper. Does that mean it's absolutely ready to go? I have to buy right now? No, not exactly. Again, you can wait this out a little bit if you really want to buy IBM. But semiconductors are not in that space. But we do have AMD report next week. So again, that'll give us a lot of clarity or color in terms of their chip makers' earnings. But we did get a great report from Taiwan Semiconductor last week, which helped boost Qualcomm, Nvidia, and AMD. So again, I would start looking more of the Taiwan Semiconductors, Qualcomm's, Nvidia, AMD, obviously for semiconductors. IBM will be more for like enterprise software, Accenture, ServiceNow, CRM. That's more cloud, but IBM does cloud as well. If you kind of want cloud exposure, I still think Microsoft's the best game in town. I think Amazon's the best game in town. You also have Google. Those three, more cash on hand for Google and Microsoft. I wouldn't want to be in IBM, excuse me, IWM. IBM, I mean, for the past 3 years, it's pretty much been sideways action. If we kind of look up at a multi-decade chart, I mean, kind of just sitting still, sitting pretty here. Does it pay a yield? Sure, but again, I think there's better places to put your money in than IBM personally. What is your S&P 500 target by range? Last year you said it was 380 and was on point. I in regards to the S&P this year, I did do a video on it for Investment Club. I have a report that I generated and everything in terms of our targets. Really, around 4,600, 4,700 would be great. But again, we need a lot of info to move forward. In terms of target by end of the year, I'm gonna probably go say 36, 3,700. I think August will probably get to that low. Again, we need a lot of things going right. I don't think a recession hits, and that may be the best case scenario. Call me the ultimate optimist, but America is really resilient, as we saw with COVID and pretty much anything that's gone through. So again, we have really dark periods, and we all get nervous and scared. Obviously, positioning in terms of the S&P is at extreme levels to the low side. Again, we may get that big short squeeze relatively soon in terms of gas prices going down. That means consumers are seeing inflation is kind of subsiding. That to them is their scoreboard. Consumers, all of us, we think we don't look at peanut butter prices every day or milk prices. We see gasoline prices right in front of us. So again, if those numbers are coming down, which we talked about this morning, you're going to see consumer confidence take up a bit. The stock market's a great barometer for everyone to see when stocks are going up or breaking out of a range. Hey, stock market's good. I feel a little more confident. Again, consumer spending has been relatively strong. Unemployment has been strong with NFP. So again, the recession narrative, sure, there's fear of it, but we're not there. So I think that we still get higher in the S&P, probably around 4,700, maybe 4,650 or so. I don't think we get back to all-time highs by the end of the year. We would need a lot of good news. Uh, that won't happen unless we get a literal peace deal from Russia and Ukraine. That's the only way you'll get to all-time highs. Again, 4,600, the all-time highs, I believe, was right around 4,800. So I'm like 45, 4,600 on the S&P or so. Maybe probably get around here, 4,500. Yeah, that sounds about right on the top end. We'll tap it more than likely, but again, we need a lot to go right. So it's not more of hopium. It's more of we need more information. We need to see those earnings. We need to see if the Fed pivots. If the Fed in September stops raising rates, that's a pivot. You're going to go higher. Just remember that. The Fed, just follow the Fed at the end of the day. That's important. The Fed has all the money. They're the house. So again, if there's less chips in the casino, that's the Fed more than likely. So again, less money chasing goods. That's kind of the deal. But we need inflation to subside, and then we can move forward. All right, guys. Appreciate you, Santiago, for watching. Make sure to hit that like button if you like these videos. Excuse me. We went over the dollar, the S&P futures this morning, commodities rolling over, gas prices, all good stuff. Let's keep an eye on the dollar. 106.41 is my alert to the downside. If we do break that, then really we're going to get to around 3,900 or so. Well, actually, look, we're going to get to 3,900 now. And again, we talked about S&P. If we break above 3,900, we may ignite higher, especially if the dollar breaks down to 105. Maybe 4,000 gap fill is on the way. Have a great rest of your day, guys. We'll see you later today for the aftermarket recap. Cheers.